you know, how is it that you actually make your portfolio go global, and especially for the retail investor who doesn't have many options, and you know, you're trying to build a portfolio which is not just China plus one, it's US plus one, and maybe then RIC as you describe it, Russia, India, China as well on one end.
Needs to pay, yeah. So, well, for a retail investor, first of all, you play to your strengths. So if you know cricket, don't try and play soccer. So if you know I'm not going to beat a mutual fund manager, and there are so many good managers out there now, and you can hire them literally for less than 1%.
Or wealth managers.
Right?
Yeah.
And another theme of mine has been, if you remember, every year we speak about it, is the golden period of entrepreneurs.
Yes.
Is the 40s to early 50s. If you look at our fund management business, don't you see all of them around?
Yeah.
Now, even if I take the largest
one right
funds,
in front, Karan Bhagat.
Yeah. We spoke about him in
Yes.
the past, or even Dipinder, who's running Zomato, or even the fund industry. If you take Vasan at SBI, or you take Chirag and Navneet at HDFC, or Naren and Anish at ICICI, or even those who've gone out on their own. There's Pankaj Tibrewal, Vikas Khemani, Sunil, so many of them around. And they're talented, good allocators of capital with good track records. Why is a retail guy trying to beat them? Do what you're good at. Let these guys be the stewards of your money. You don't make money in India, honestly, by buying an ETF, because the market is still broad-basing. But active managers like this, who buy stocks bottom up, do create value for you. You have to have patience. In every cycle, everyone's not going to win every quarter, every 6 months. Like in a company. Companies also go through their phases, and the funds will also go through their phases. But if you're, by and large, with the right steward of your money, I think there's tremendous wealth to be made here. Even to go global, there are opportunities. A lot of the fund houses had indeed put out products through which you could access global markets. Even stuff which everyone knew last year or year before, that there will be a move toward hard assets, thanks to the debasement of currencies, has played out in gold and silver, and that bull market is still alive. Even those products were available to you. So it's really a question. At heart, you need to sit back and think, how do I want my asset allocation? Historically, Indians put money in real estate and gold as a kind of anti-inflation hedge, where the Indian currency kept losing value. It's also now playing into the global inflation, which now the US and the West has unleashed. So this trend is only going to accelerate. It's not going away in a hurry. But that's a place, what I call the fear trade, that you don't want to lose. So you park money in real estate and gold. The hope trade is always equities, because you can grow the business and become much larger. And there are opportunities in India to do that as well. So if your asset allocation mix is okay, your position sizing is okay, you don't get stampeded out whenever some kind of global turmoil upsets our markets. And at that time, if let's say you have 2 years of your expenses on the side, or something saved for a rainy day, or maybe always 5-7% cash available to buy some great opportunity, I think you'll be fine.